Good morning, everybody. Hey, seems like it's been a long time since I've talked to you. A couple of days off last week. Hope you all had a great 4th of July. I do want to remind you again that as we get ready and wait for Dave to come in, that we want to remind you about our free report on retirement strategies. Folks, listen, as high as this market's gotten, you need to make sure you have a retirement strategy in place. There's 5 things you need to remember, and it's included in this report. Text the word retirement to 863-285-3815, or you can click the link in this post on Facebook. So, hey, Dave will be with us in just a few moments. Again, if you like what we're doing, please like our page, Statler Financial Services, and share this video with your friends and family. Appreciate it.
105.7 Light FM, morning all. Hello. Glad you're here today. It is 8:38 now, 22 before 9. He is back because we got a relatively quiet financial week ahead of us as far as government reports. I need somebody who's more plugged in than I am. Phillip Statler from the offices of Statler Financial Services in downtown Sebring is here. Phillip, good morning and a belated happy 4th of July.
Good morning, Dave. Hey, happy 4th of July to you. I hope you had a great holiday. I did. I got a lot of painting done at my house over the last 3 days. I did take yesterday for rest, but it's good to be back in the office and good to be talking to everybody.
Absolutely. I'm glad to have you back. As for me, it was a shopping weekend with Gladys, so I'm a lot poorer this morning. I'm hoping I can get my investments to go up, and I don't think the movement is in that direction at the moment.
It doesn't look that way. You know, you and I were talking before we went on the air that, Friday was kind of a give back day, mostly just because jobs were so good that it's one of those cases, I think, that good news is bad news because everybody's looking for a rate cut this month. And every time we see good economic indicators coming out, it lessens the chance for that interest rate cut.
Yeah, absolutely. I kind of went out on a limb when the report came out on Friday, and it said, oh, my goodness, we're like 60,000 more than anybody expected as far as the job creation last month. Wall Street's going to react to that as if it makes the interest rate cut less likely. In reality, most of investors are still saying, the analysts are saying, yeah, they're going to cut rates. Half a point to be a smoke dream, but a quarter point is still consensus likely. But when the odds go from 95% down to 85%, it gives a few conservative investors the willies, and they kind of back out of equities for a while, don't they?
Well, they do, and that's not much of a downgrade in terms of statistical numbers. I mean, a tenth of or 10% difference is not a huge difference in what's expected. And so, I don't know if we continue to see good news, if we'll see a rate cut. I know that the markets have one priced in. And so if we don't get one, that would definitely be bad news.
Absolutely. And that's the part that scares me the most. Unpredictability is what makes investors really willy. And the other thing that might affect it that I'm going to pay a lot of attention to is Chairman Jerome Powell is due up on Capitol Hill this week to talk to both the House of Representatives and the Senate. It'd be probably a pretty fair guess, given the concern over the interest rate cut, that investors are going to be watching every word that he says. And if he drinks his coffee out of the other side of the cup, it's going to result in a 10-point swing on the markets, right?
Well, I think so. They're definitely going to pay attention to what he has to say. And because hopefully, they're going to look for anything that's kind of gives his hand away that may, kind of give some indication of what the Fed's really thinking they're going to do with interest rates. And so a lot of eyes will be on him.
It's going to be basically, if you're reading between the lines on us, folks, it's going to be mostly a gossip and tea leaves week more than anything else, because earnings season kind of begins next week. And basically all we've got are some relatively routine reports coming out this week out of the government. So market moving is going to come out of either tea leaves reading what the Fed might do, or news that comes out of downgrades, upgrades, and overseas markets. About the only thing that we've got that's getting any excitement at all this morning is a bunch of articles I'm reading on my tip sheets about what Amazon Prime Day next week could do to retailers. So I'd imagine that brick and mortar retailers are going to be under pressure just for morale basis this week.
Well, that's true. I forgot about that coming up. And when I go on Amazon, it pops up and reminds me every time. But that could that could be some impactful things on the brick and mortar guys for sure.
Yep. They're accenting the back to school stuff, which is obviously a critical time of the year for brick and mortar retailers. So it doesn't look overly good. But if they do well, okay. If they don't, fine. The only real company news that we've got is Deutsche Bank. I'd mentioned it last week. They came under some fire over in Europe. I gather we've got some news coming out of them that could affect our bankers as well.
Well, I saw this. I can't remember if I saw it Friday or over the weekend, but they are going to cut. They're planning on restructuring a lot of stuff, a massive restructuring. They're going to cut 18,000 jobs. They're basically going to get out of the global equities sale and trading business. And so they're going to cut 18,000 jobs between now and 2020 over the next 3 years. And so they were down as much as 4% earlier. They're still down 3.5% this morning right now. Now that's not a big. I mean, it is a big number, but I mean it's not a high price stock. So it's right now at $6.92, I think. So still not. You don't want anything to be down that much, but if restructuring can bring them back to some decent profitability, you kind of got to do what you got to do.
Yeah, the concept of a banker actually going to do banking and get out of the other stuff might be kind of interesting. I've noticed that it's kind of resulted in some downgrades for other financials on our side of the pond as well. So there's always a sector issue. When one big player in a sector ends up having difficulties, the other ones tend to suffer by guilt by association, don't they?
They do sometimes, especially if their businesses kind of look exactly the same. Then people start to think, well, if they're doing bad, maybe the other financial institutions are too. They're just not telling us.
Understood. So resetting the table for the week here this morning, we mentioned this Friday was, I'm going to call it a pink day because it really wasn't a sell-off given the fact that we'd had a couple of record highs the day before. But at the same time, it was red ink. The Dow was off by about 44 points. NASDAQ was off by about 8.5. Standard & Poor's off by about 5.5 on Friday. Some of that profit taking from the record highs that we set on Wednesday before the 4th of July. Some of it expectations that the odds of that rate cut could be declining by a little bit. 45 minutes before we open this morning, Phillip, are we going to see any kind of a turn, or are we turning pink again this morning?
We're still pink, heading down again today, pretty much by 0.2% or better. We've got the Dow down 76 points right now, which is almost 1/3%. The S&P 500 down a little over 0.2%, down $6.65. The NASDAQ's down about 1/3% also at 28.25. We got gold and silver kicking back up a little bit. And then we got crude oil down about 0.3% to $57.34 a barrel right now.
Now, I noticed on the interest rate yields on federal bonds, kind of interesting, the 10-year Treasury bills had dipped as low as 1.95% for a while. They're back up a little over 2% today, but we're still flirting with just abnormally low interest rates, right?
Yeah, we are, and that's affecting a lot of things. Even like online savings accounts, I've seen have dropped 0.1% over the last week or so.
And they weren't making diddly poop to begin with. That was about it. Overseas markets, everything is in pink to red ink this morning in both Japan, China, and the European theater. Phillip, somebody needs some advice as far as how to insulate themselves from these weird gyrations in the financial markets. How do I find you on the phone?
Hey, Dave, if they need a retirement coach, we're the place to look. Give us a call at 863-382-0037. We've got our free report on retirement strategies. Great thing to get your hands on. Text the word retirement to 863-285-3815. Or if you're watching this on Facebook, you can just click the link and it'll take you right to it. And then join us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
Good stuff, and we stream it too at newstalk730am.com. Phillip, thank you so much. We'll look forward to talking in the morning, all right?
All right, babe. Thanks. Appreciate it.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Who will be?
Again, I want to thank you for joining us today. If you like what we're doing, please like our page at Statler Financial Services and share this video with your friends and family. Encourage them to like our page. Have a great day. I look forward to speaking to you again tomorrow.